Financial markets around the world have rallied on the U.S. Senate's approval of the bill earlier in the day. But even with the deal, economists say the financial damage incurred by the shutdown has run into the billions of dollars. Our Arirang reports.
Wall Street is finally seeing the period of so-called political risk lifted after Senate leaders hammered out an agreement to end the 16-day government shutdown and raise the debt ceiling. Experts see it as a clear sign to buy stocks.
This fight is now about how much the federal deficit shrinks. Whether it goes down $200 billion or $300 billion or $500 billion is now not relevant. It's in a downward path. Stocks are going higher.
Boosted by the deal, U.S. markets closed up more than 1% higher across the board. The S&P 500 was up 1.4% for the day, closing at only 5 points off a record closing high seen in mid-September. The Dow Jones Industrial Average closed over 200 points, or 1.3% higher, at 15,373.83. Asian stocks also rose on the news. Korea's benchmark Kospi opened over 0.6% higher, and Japan's Topix index jumped over 1%, pushing the benchmark index towards a 5-month high. The threat of default seems to have retreated, but economists say the damage has already run into the billions. Ratings firm Standard & Poor's estimates the amount to be $24 billion. Forecasting firm Macroeconomics Advisor says the 2-week shutdown has trimmed about 0.3 percentage points from the U.S. fourth quarter growth. Consumer confidence has plunged to the lowest level since the collapse of Lehman Brothers in 2008, and the United States short-term borrowing costs have soared, with investors demanding interest payments threefold higher than a few weeks ago. And as the deal agreed by Congress only extends the debt limit until January, economists say the absence of a solid deal will continue to create market uncertainty in the long term, amounting to even greater losses for the world's largest economy. Arirang, Arirang News.